morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. Treasury Secretary Scott Bessent says the Trump administration is focused on 10-year Treasury yields and not pushing the Fed to cut rates. Donald Trump's aides look to tone down his call for the U.S. to step in and own the Gaza Strip after widespread condemnation. Plus, the BOE is set to cut rates for a third time while lowering its growth forecast and predicting higher inflation. We'll, of course, bring you the BOE's decision when it's released at 12 p.m. London time. Then viewers in the UK will see full coverage of the news conference at 12:30 p.m. At 4 p.m., we'll bring you also our interview with the Governor, Andrew Bailey. And then we're also watching events in France, where the Prime Minister, François Bayrou, survived two non-confidence motions yesterday, finally ensuring the adoption of a budget following months of political turmoil. But let's begin in Washington. On the geopolitical front, aides to President Trump are trying to tone down his idea of depopulating and taking over Gaza after the comments were widely condemned across the globe, but welcomed by some lawmakers in Israel. On the tech front, Silicon Valley continues to retreat from diversity policies that have fallen out of favor during the Trump administration, with Alphabet the latest company to do so. So to discuss all of these topics, we have Bloomberg's EMEA News Director, Roz Matheson, and of course our Executive Editor for Global Technology, Peter Elstrom. So thank you both for joining us. Roz, the White House is now walking back, Trump's Gaza comments. Are there worries about his new Ukraine plan, which they're set to present at the Munich Security Conference?
Well, that's right. As you were saying, there was a bit of a change in tone overnight on Gaza. That's not to say the US doesn't want to be involved in some fashion, perhaps walking back the initial idea that they would be coming in very quickly, possibly militarily, and they wanted a wholesale relocation out of Gaza permanently. So you can see that that's gone into a little bit of the land of nebulous in the minute. But given that, and given that we are expecting to see the bones, more bones in a way, on the idea of what the US would want with a peace deal from Ukraine as soon as next week at the Munich Security Conference, and what those parameters would be. What this all tells us is that Trump is very mercurial, which we know. He's very transactional, as we know. So he will want something that that he thinks is a good deal, particularly for the US, out of this. And what we understand, that could entail freezing the conflict, which is potentially advantageous for Russia in terms of the land that it's currently occupying inside Ukraine. Some sort of understanding around security guarantees for Ukraine, but we don't really know what that might be. It doesn't seem it's going to include them joining NATO. Perhaps to kind of help shepherd this through, the US gets access to critical minerals in Ukraine. That's the important part of the deal, really, for the US. But, what we can see on Gaza, but also what we see from Trump in general when it comes to allies and adversaries alike, is that he's going to be very transactional. So the parameters around Ukraine could move and shift.
And Roz, as you point out, the economy and geopolitics seems to be blurring with this administration, where, the interview of the month, without a doubt, is David Gura sitting down with Scott Bessent, the new Treasury Secretary. We're starting to have more of an idea of what he wants.
Well, that's right. It's very clear that he's also navigating, by the way, within this new administration himself and all the other voices in Trump's inner circle. But he's pushing very heavily on tax, and that's possibly getting a little bit complicated in Congress. He really wants those tax cuts to become permanent, and that's a key priority for him. He keeps talking about his triple threes, which we all know is, the deficit at 3% of GDP, increasing oil production by 3 million barrels a day, economic growth of 3%. So he needs everything to line up to deliver those, and he's very focused on that. But interestingly to see that he's talking about managing things through the economy and inflation and the yield curve, and not sort of pressuring the Fed. He's quite cautious about that. I think Donald Trump's much more overt about saying what he wants from Fed, but it's interesting to see Scott Bessent saying, I'm going to come at this from a different direction. That's not suggesting he wants to do overt curve control for treasuries, but that he's going to try and create the conditions for inflation and therefore a knock-on effect.
And Peter, Alphabet, Google is scaling back on DEI. It's just the latest, tech company to try and get rid of some of the initiatives. Is that because the White House is directly putting pressure on them?
The White House is certainly serving as an example of what they expect these companies to do. So, yeah, Google, Alphabet is kind of following in the footsteps of Meta and Amazon, some of these other Silicon Valley companies that have pulled back from the explicit DEI goals. And in this case, Google said they're not going to pursue what they have, these very specific aspirational goals in terms of diversity. This comes with a pretty important legal backdrop, though. It's not just the Trump administration. Before this in the United States, we had the Supreme Court making a decision about college admissions, where they said universities, including Harvard and the University of Michigan, could not use specific racial targets for admitting students. Now, some on the conservative side in the United States have seen that as a precedent where they can now go after companies and say, you can't use these same kind of targets in the workplace that you had in the academic institutions, too. So there are some lawsuits against some of these companies, including against Alphabet, as they pull back from this. So the Trump administration is certainly using this as an opportunity to take away some of the DEI initiatives within the government, but you're seeing that carry over into the private sector in important ways.
But, Peter, does it mean that actually they'll go back on it, or that they just won't advertise it?
Well, that's a good question. I think it probably depends on which company we're talking about. Google certainly said that they still feel like this is an important initiative, but they're not going to have the same kind of quantitative goals that they had in the past.
Peter, I mean, there's also a lot of earnings coming from the tech world at a time where there's also so much uncertainty about tariffs.
Yeah, some disappointing earnings from some of the tech world. Certainly some of the chip companies, including AMD and Qualcomm and ARM at this point. You're seeing some softness in the smartphone market, which hit Qualcomm in particular and ARM. It's carrying over to ARM. And the big question that we talked about earlier this week, it seems like so long ago with Alphabet and some of these other companies, is whether these huge investments in AI are going to pay off or not. And I think there are some concerns that if the companies that are investing tens of billions of dollars are not beginning to see revenue growth, then they're going to pull back on their capital expenditures, and that could hit some of the chip companies, some of the others deeper in the supply chain.
And Roz, again, every day there's another story about Elon Musk and his efforts to hollow out the U.S. government. He seems to be pretty effective.
Well, he's certainly found out everywhere, isn't he? And with his Doge associates. But, what we're hearing, obviously, is that so far about 40,000 government employees are saying they will take that buyout offer. But remember that about 60,000 retire every year anyways, 2% of the civilian workforce there. So are these people who were probably looking maybe to retire anyway or looking at different and they're taking that as an opportunity? Are you losing people who are going to go anyway? Or are you losing the people who were really smart? You want to keep them somehow in the organisation to some extent. So it'll be interesting to see more of that unfold, exactly who's involved and what that does to the workforce. But obviously, he's in everything. He's looking in the Treasury, in the payment system, looking perhaps at some of the payments that are made out of Medicaid, some of the contracts that are there. So this is just the beginning. He's very, very busy. The question again is, how deep does this go? How much does this shift the budget responsibility in a way over to Elon Musk and out of Congress? And for Bessent too, as the Treasury Secretary, how is their relationship going to unfold? Do we see divisions opening between them potentially about how this goes?
It's really incredible. We could speak about this, just geopolitics, White House and tech, for another 3 hours. Thank you, Roz Matheson, Bloomberg's EMEA News Director, and Peter Elstrom, our Executive Editor for Global Technology. Now, coming up, we speak exclusively to the Chief Executive of Intesa Sanpaolo, as Italy's largest lender announces a new share buyback worth 2 billion euros. That interview coming up next, and this is Bloomberg. Welcome back, everyone. It's been a bumper week for European bank earnings. Now, the Italian lender Intesa Sanpaolo has reported a record profit for the full year, with net income in the fourth quarter beating estimates. It also announced a new share buyback worth 2 billion euros. Well, Intesa's chief executive officer, Carlo Messina, also said on the earnings call earlier this week that he has no plans to join the deal wave sweeping Italian banking. And Carlo Messina joins us now for an exclusive conversation. Mr. Messina, as always, thank you so much for joining us. Look, I know we've been following actually your bank with great intent and looking at the share price. You've always said you will give higher returns, higher profit, all that organically. So what are the pillars for that growth and the pillars for your strategy?
So, Francine, that we have a business model that is the real winning business model, especially in an environment of reduction of interest rate, because we are a strong wealth management and protection company with the 1.4 trillion euros of wealth of the Italian families, and we are able to increase fee and commissions income, and we will accelerate this increase during 2025, and this will more than compensate the reduction in net interest income. So we are a unique opportunity for investments in diversification of revenues. That's the reason why we think that we will continue to maintain this extra performance in terms of market cap in comparison with other peers, especially during 2025.
And Carlo, again, so this is partly basically taking deposits of clients and turning them into higher yielding assets. Can you give us a flavor of the number of assets that you could do that with?
So we are today with the 1.4 trillion euros of wealth, out of which 600 billion is deposits, and the other part is asset under management and asset under administration. We have more or less 150 billion euros of asset under administration and deposits expiring, term deposits, and asset administration that are capital gain positive. So we have a significant room to increase the fee and commissions income in the organization. And also looking at property and casualties business, we are accelerating. We are becoming, for sure, one of the most important players in the country. And also in that area, we can accelerate absolutely during 2025.
Carlo, do you have a specific target for assets under management for this year or next?
So we think that we can have a growth on a quarterly basis. We have more or less 35 billion euros of gross inflows, and this will remain during 2025. So our estimate is that we can have between 120 billion and 150 billion euros that within a rotation and the possibility to increase fee and commissions on this area.
What's your take on what's happening M&A-wise in Italy? I mean, every day there's something new.
Absolutely. So there's something like Italy is the cool environment for the M&A. So I think that there is, just to give you just a starting point, during 2024, we increased our total customer financial asset by 77 billion euros. So we increase year by year. We're increasing our wealth management for equivalent of 50% of one of the companies that is involved today in the M&A, just to give you the idea of the dimension of Intesa Sanpaolo in comparison with all the other peers. So in any case, any kind of aggregation will create a competitor that will be not so significant for Intesa Sanpaolo. I think that there is a lot of confusion, so that's my personal view on what is happening in Italy.
From investors?
It's a confusion on both sides, because there is a lot of trying to be a leading player also with some approach that is creating confusions in the perception of the investors. And that's my personal feeling on what is happening in Italy. You have a transaction that can have an industrial sense, other probably more difficult to understand. What it is really important at the end is that the market is king. So cash is king, market is king. So if they will be able to demonstrate that they can create value and synergies, then at the end a shareholder meeting will receive the approval. Otherwise, it will not be possible to make a deal.
Carlo, I mean, from my understanding, you've been pretty clear over, even the press conference earlier this week that actually you don't want a bolt-on acquisition in Italy or in Europe. Why a hard stance? Why a hard no?
So we want to remain a safe and institutional harbor for the international investor. So if you want to rely on a company that can give you a significant net income on a sustainable base, based on the right business model with a significant investment on technology, you can rely on Intesa Sanpaolo. We don't want to enter into execution risk deriving from M&A, because M&A is cool when you make a declaration of OPA, then you have to make integration. So you can be a fantastic advisor, but when you have to make execution, and you know that we made a lot of transactions in the right timing, because today we are in this condition because we made the acquisition at the timing, but the tough work is when you make integration and IT integration of people, culture. So as soon as you start with this process, you will enter into a difficult condition. You will have to dedicate managerial attention. You have to postpone some investments in technology. So Intesa Sanpaolo remains today the only option that can say, okay, we will continue to deliver these results with a sustainable approach and with all the attention of the CEO on delivering results.
Carlo, going back to this, confusion, because there's just a lot. There's a lot of news out. The Italian government wants one thing. You have Mediobanca getting involved in Monte Paschi, or the other way around. You have Commerzbank trying to be bought out by UniCredit. What do you think makes sense for the Italian banking?
So that's for sure. You have all the transactions that can have an industrial sense can make sense for the real economy. So if you are in a position to create a player that can improve conditions for clients and for all the stakeholders, you can create value. So it is clear that a transaction like the one that we made with UBI, so the one that you can perform in the banking sector, can make some synergies, mainly cost synergies through reduction of people. So this is a point from a social point of view, and this is something that can create value in the medium long term. Other kind of transaction are a question mark. Then it is not, I cannot tell you that cannot work by definition, but it will be more difficult to understand what could be the final results.
I know you're very focused on clients and getting new clients. Do you think it's an advantage, staying away from
Absolutely.
all of these moves?
It's an advantage from a client point of view by definition, because client will enter into something that is the difficult position. When you enter into integration, you will have people that have relation with client that will enter into some uncertainty, and this is not positive for an organization. And we are a safe harbor by definition. At the same time, you will have also a lot of talents, because some companies that are involved in this transaction have a lot of high-quality management team. And Intesa Sanpaolo, by definition, is the place in which, if you want to work in private banking, investment banking, not saying nothing that I cannot say, but by definition, if you want to stay in an environment with a leading bank in Europe, with the possibility to have significant career, you can join Intesa Sanpaolo.
So I feel like it's an open pitch.
Absolutely.
So you're getting talent.
But you know that I'm very tough when I want to do something. So I'm ready to have all the talents that are in uncertainty in this period in Italy.
Who needs LinkedIn?
No acquisition of banks or other entities, but potential acquisition of people. So.
You're open to
yes,
hiring.
Right.
Carlo.
You can join us.
Carlo, thank you so much. Carlo Messina, Managing Director and Chief Executive Officer of Intesa Sanpaolo. Coming up, it's BOE Decision Day. We'll be live on Threadneedle Street for a preview. That's next, and this is Bloomberg. The Bank of England is expected to cut interest rates for a third time later today, but with a warning that further easing will be gradual. Bloomberg's UK correspondent Lizzie Burden is outside the BOE. So, Lizzie, set up the guide, the decision for today.
Well, here in the UK, we've got an economic situation that's somewhere between the US and the euro area, Francine. You've got weak growth, but also that short-term pickup in inflation. And that's why unanimously economists are expecting this quarter-point cut today. The only dissenter expected is Catherine Mann, the big hawk on the committee. But it would be a dovish surprise for markets if even she voted for a cut today. And maybe we could see a jumbo cut vote from Swati Dhingra, the archdove on the committee. The other signal that markets are watching out for is the Bank of England non-committal on the path ahead? Because the expectation is that actually they don't ditch the guidance and they stick to the guidance that it will be a gradual path from here on out. Now, speaking of the future, the real focus, at least for the Chancellor Rachel Reeves, is going to be the forecast for the path ahead for the economy. The expectation being that they downgrade growth, raise the inflation forecast, but it'll be predicated on an outdated market curve, and so it's a difficult communications job for the Bank of England Governor Andrew Bailey. He's been here before, but if he doesn't kind of push back against market pricing, then it may appear that he's criticising the Chancellor, because it's going to look like the budget in October has added to the problems of the economy, and indeed growth is the Prime Minister's top priority. But the last thing I'll say is this is really important for the Chancellor in terms of her headroom. Of course, she's waiting for that forecast from the Office for Budget Responsibility in terms of how much headroom she has left. But this will give her a bit of a clue as to whether she'll face a difficult choice between spending cuts, more tax rises, or breaking her non-negotiable fiscal rules.
Lizzie, thanks so much. Lizzie Burden there with the very latest on the Bank of England. In the meantime, the French Prime Minister, François Bayrou, survived 2 non-confidence motions yesterday, finally ensuring the adoption of a budget following months of political turmoil. Let's get more with Bloomberg's Caroline Conant. So, Caroline, how did Bayrou manage to survive, and what's actually in the budget?
You know, Francine, the hemicycle of the National Assembly was almost empty yesterday, and that's because neither the Socialists nor the National Rally of Marine Le Pen decided to show up and vote for this motion of no confidence. Instead, they decided to abstain, and that's because François Bayrou, the new Prime Minister, has had quite a different approach from his predecessor Michel Barnier, whose government collapsed early December. He's included the Socialists from the very early stages in January in all the budget discussions. He's also reopened the Pandora box of the pension reform with new discussion on the retirement age. So clearly this is a very narrow path for François Bayrou, but he's managed to survive even though there is still a fractured parliament. Already the last motion of confidence cost 12 billion euros to the French economy. That's according to the government. In this new budget, 50 billion euros of savings. This is, in theory, going to avoid snap elections, at least in the short term.
Caroline, as always, terrific briefing, Caroline Conant there in Paris. A reminder, don't miss our interview with the U.S. Treasury Secretary Scott Bessent at 6 p.m. London time. That's one interview you definitely don't want to miss with David Gura. Up next, a Bloomberg Brief, Manus Karani in New York, and this is Bloomberg.